I think the proper odds are 75 to 80% that the Solana ETF will be trading, by the deadline in October or shortly thereafter. I don't know what Polymarket says.
Well, hello. We are live here at DAS alongside Matthew Sigel, head of digital assets research at Van Eck. Many-time guest on the Lightspeed podcast. We always like having you on, and now we get to have you in person here at the conference. So, Matthew, so good to get to catch up.
Good to be back, Jack.
I guess let's just start with this being an institutional conference, Van Eck being a firm that has kind of institutions that it tries to sell to and work with. What are the vibes you're seeing, I guess, focused on Solana specifically, and maybe crypto more broadly? How do the institutions feel about things right now from what you're seeing?
Yeah, I think there's a huge gap in the vibe between crypto Twitter and institutions right now. My inbound phone calls are up, several 100% since the election, from allocators and advisors who have a 0% weight to Bitcoin and who now feel that there is the freedom to add, small positions to start without offending the boardroom or their clients. So that's been super encouraging, but it is really focused on Bitcoin. The interactions on the proof of stake coins have been very low, I would say. And I think it's just, start with walking and something easy and then, develop into the more complex products. But what crypto Twitter has kind of gotten right is that the emphasis on speculation and the kind of speculative use cases of the proof of stake networks are not really resonating with institutional allocators. So that's why there's so much attention on stablecoins. But then with stablecoins, you run into the question of is that actually going to accrue value back to a SOL token or an ETH token? And, it hasn't really happened yet.
Yeah, I've noticed so much stablecoin talk here. It's like the least common denominator that everyone can be like, okay, we all agree stablecoins are good. You said that, crypto Twitter's kind of bearish right now. Institutions are more bullish. Who's right in your opinion? It seems like a really uncertain time in the markets with broader macro fears, tariffs, and so forth. Also, just maybe a lull in some of the Trump, the initial days of Trump crypto policy. But then again, there is a pro-crypto president in the White House. So, where do you sit on things personally?
I think it comes down to time horizon for investors who are going to take a multi-year view. Then generally when the fear levels are this high, and you can see this in many different data sets. There's a data set on economic uncertainty, which is a polling question. It's spiked to levels that we haven't seen since COVID, and before that, great financial crisis. So the level of fear in the market tells me that you're better off buying than selling at this moment. But if you're one of the people who's been lucky enough to be in cash year to date because you were a seller of the rally in December, then you have the luxury of kind of taking your time and looking for opportunities. So I like to say in markets, there's no right or wrong. There's only time horizon. And I think that's really what the cross currents are at the moment.
Okay, yeah. So big news this week. Solana futures started trading on the CME. This is important for Solana ETFs because regulators have historically looked for a regulated market of significant size to allow spot ETFs to trade. But through 2 days, there has not been significant size, shall we say. There's the futures, Solana futures traded less than Bitcoin and Ethereum futures did. Are you watching that? Does that matter at all for spot ETF odds, or is that just noise at this point?
I don't think it matters. The idea that you needed that regulated futures market of significant size in order to list a spot crypto ETF was a Gary Gensler psyop that had no historical basis. There are plenty of examples of ETFs based on underlying commodities that didn't have a futures contract. That said, it's not a negative. I think there's actually a good chance that there could be a Solana futures ETF that goes live as soon as next week. And
Wow.
that should increase the trading volumes that you're seeing on the CME. I think it's a validation of the change in policy that CME is listing these products so soon after the inauguration. And then for the SOL ETFs that a number of issues have filed for, the final deadline is in October. So there's still plenty of time to work out the questions, and Hester Pierce has a lot of questions that she's put out to the community that we're trying to answer. Still think the odds are quite strong that by the time that October deadline comes around, those questions are ironed out and there will be spot SOL ETFs.
Yeah, I mean, from just what I've read, it seems like Bitcoin futures initially launched during kind of a bull cycle for Bitcoin. Solana futures are launching into a pretty bad market. You don't necessarily want to speculate on the future price of Solana right now. So I wonder if that's driving some of the limited flows so far, which is just kind of like unfortunate timing, I guess, for Solana.
Yeah, it's altcoin bear market. I think we'd have to go back and look and see, like,
I
when
might be wrong.
Bitcoin
Yeah.
futures first launched,
Yeah.
that was a market top.
Uh-huh.
And maybe it's better to launch in a bear market, right? But I think
Yeah.
the low volumes are a function of lack of interest in altcoins at the moment, oversupply of tokens, meme coins sucking liquidity out of the market, unfavorable inflation dynamics as compared to what you can get in public equities at the moment. So in our active strategies year to date, we've pivoted more towards equities. And if you look at our filings, a lot of our competitors have been filing for single token ETFs on X, Y, or Z token. We've only done one of those. One filing we're excited about is an actively managed ETF in the equity space that can also own some crypto ETFs. So there's the supply issue. And the great things about crypto, capital formation is so quickly, anyone can make a token. The downside of that is oversupply. And the equity market doesn't have that right now. There are a number of IPOs that we're expecting in the equity market. But when we add up the combined market cap of all of those potential IPOs, we get about a $20 billion number versus a listed universe of roughly $200 billion. So that's 10% of additional supply. Look at what's happening in altcoins. It's a lot more than 10% increase in new issues.
Yeah. One piece I want to touch on, I'm not sure how much you can get into the inside baseball here, but something I've been curious about is when you see, random asset issuers filing for like a random token ETF, say like the Jack Coin ETF is filed for, who benefits? Is the company literally paying that asset issuer to create an ETF for it? I'm assuming there wouldn't be demand for a lot of these things, so it's not like necessarily a great product for that issuer to be putting its time into. So what's kind of going on behind the scenes when you see these really random altcoin ETFs?
Yeah, so I'll start with our framework for how we decide to list an ETF. We basically need three things. We need internal conviction from the research team that it's an interesting asset with a strong investment case that can appreciate in the future. The second criteria is we need counterparty support. And that can be the market makers who trade shares of the ETF. It can be the liquidity providers from whom we'd be purchasing the tokens. And in the case of a US regulated ETF, you want those liquidity providers to be reputable institutions, hopefully. And then we want customer demand, where our existing customers are saying, hey, if you had that ETF, we would like to buy it. And it's hard to tick all three of those boxes in the single token side in crypto right now, especially given so many issuers filing for the same tokens. So what I think that crypto Twitter and a lot of investors may miss is that some of these issuers who are filing single token ETFs, they're getting those products seeded by perhaps the foundation or the labs company who has all these tokens, and they might be staked and earning some return, but they're not generating any additional benefit to the project or the community. And if you can wrap them inside of an ETF, it's a PR victory. And there can even be commercial agreements where some of those staking rewards could be passed back to the foundation. So my hunch is that behind the scenes, some foundations have been willing to seed projects that otherwise might not find so much organic demand. And you may find some of these products come to market with decent AUM, could be 25, 50, 100 million, but look at the volumes once they list, and that'll tell you whether there's actually customer demand. So we are, pretty $100 billion organization. Crypto is 3 or 4 billion worth of that, depending on the market's move. We're just trying to be a bit more disciplined to stick to projects where we think that our customers, want to buy them.
That's fascinating. I want to dig in more there, but we're limited on time, so I'm not going to go too much deeper. I think there's a real rabbit hole there. What should Solana folks know about macro right now? I know tariff fears have sent all markets nuking. It's not something I tend to pay too much attention to or that we talk about much on Lightspeed, but it seems like we're in a time when the macro environment really matters for crypto markets. So what's important, what's not, what's likely to be, make some kind of long-term impact on crypto markets and Sol specifically?
The last month or so, there's been a big change in the market structure just within equities. The end of mega cap tech outperformance, falling GDP estimates because of the pull forward effect from tariffs, as a lot of businesses made purchases in Q4 to avoid tariffs, and now economic activity is lower in Q1. And that resetting of earnings expectations has caused a significant underperformance of tech, specifically US tech. And that's really, I think, bleeding into underperformance by altcoins, especially given those high inflation rate in the altcoins. So some of the bounce back, if there, we're optimistic there will be one, but it's going to be macro driven, in my opinion. So maybe put that on the bearish side, right? On the bullish side, if you look at the correlation between just Bitcoin and the NASDAQ, in 2022, it peaked at something like 0.8. So 1 is a max correlation. It means the assets are always moving together. 0.8 is quite high. And if you talk to Robbie over at BlackRock, he said in 2023, we wanted to bring the Bitcoin ETF to market earlier, but at the management level and our clients observed this very high correlation between Bitcoin and NASDAQ, and we're like, what benefit is it really bringing? When the correlation fell, that gave them more motivation to list the ETF. If we look at the correlation now between Bitcoin and NASDAQ, it's like a 0.3. So it's up there, but nowhere near the 0.8.
Yeah.
And the allocators have started to notice. I mentioned that my inbound phone calls are quite a bit higher since the election. This is a topic that comes up constantly. The allocators want the diversification effects that Bitcoin promises. And some of that is starting to be, exhibited. On the altcoin side, I think the regulation is still holding us up. Like Hester Pierce put out these 50 questions to the community of how to deal with the regulatory questions around custody, around staking, what it means to be a broker-dealer. These are all highly relevant for alts, more so than they are for Bitcoin, whose kind of commodity status is more clear. And it's just taking a while for the industry to get those answers back to the SEC. The SEC has to kind of digest them, provide guidance, and that will clear the road to list the ETFs. And I think we're just in that air pocket now where the macro environment has changed. And while we are anticipating a lot of regulatory relief, we need to see the no action letters start to come. We need to see the ETF approvals start to come. The combination of those two together, I think, will lead to a pretty ferocious rally in Q4, knock on wood. But we're not there yet.
I know you're someone who tends to follow the poly markets. Do you think the market is pricing the odds of a Solana ETF in, say, 2025 correctly?
What are they right now? I don't
even
have them
know.
off the top of my head. I feel like they're in the 60s.
I haven't checked in a little while.
I think it's.
I was banking on you, Matthew.
Yeah, no, I don't know it off the top of my head. I think we're at 75-80%
and that
by that
strikes you
October deadline.
as correct?
I think the proper odds are 75 to 80% that the Solana ETF will be trading, by the deadline in October or shortly thereafter. I don't know what Polymarket says.
Yeah. Last question I'll ask you. Big topic of conversation lately has been SIMD228, the question of whether Solana's issuance is too high. And one of the big talking points in that whole debate was what institutions will think. Because I guess on one hand, you have the argument that some institutions will see like a lower nominal yield coming from staked SOL, and they'll be less interested in, I don't know, investing in the asset. On the other hand, you saw this argument that having staking rewards be too high creates like unnecessary tax burden and things like that. So I don't know, as someone who's more in the institutional world, where do you fall on issuance? Is it too high? And is issuance one way or another going to affect institutional adoption of Solana?
Sure. So in early stage capital formation, whether that's venture or even high growth public equities, you tend to see a pretty high inflation rate in the number of shares outstanding, because that's a way to raise capital and try to grow your shareholder base. And then as the company matures, the issuance tends to fall. So Solana kind of had that structure programmatically with the annual 15% decline in inflation rate. And as far as we're concerned, that was working. The ecosystem was growing, and it was predictable. There is the negative impact of the taxing on staking rewards, which is meaningful if you hold a considerable amount of Solana. So our position was, we like how Solana's DNA is around chewing glass or moving fast and breaking things, kind of experiment first, make conclusions later. And if enough of the ecosystem liked the dynamic staking model of SIMD 228, then let's give it a try. We're confident that the community would course correct if it turned out to be the wrong decision. So I think we don't have a huge opinion on the fact that the vote failed. We like that the participation rate for the vote was quite high. Vast majority of validators were contributing. There's always a risk that you lower the inflation rate too fast, and that kind of hurts growth. And it seems like the community spoke that was their fear as well. So, that's fine.
Okay, I know I said that was the last question, but last question. Yeah. You seem kind of mixed on 228. It's not the most important thing. In 2025, if we look at institutional adoption for Solana, what is going to be the most important event, factor, policy, whatever it is for people to follow?
Yeah, I think the vibe here at this conference is all about stablecoins. That's something that kind of everyone can agree on. A lot of TradFi institutions are trying to get involved. If we can prove that stablecoin transactions can move the needle for open source digital assets like Solana and ETH in a way that really drives fee growth to token holders, that is going to change people's mind, right? And some of that has to do with regulation. Even just like using USDC on Sol in New York State is no easy feat. So relaxing some of the barriers to stablecoin transactions, and then showing the market that stablecoin AUM equals fees, that'll change, I think, the sentiment around this market.
Great. Matthew Sigel, DAS 2025. Thanks so much for being here, man.